Welcome to an exceptional edition of Rebellion's educational series, one that's dedicated to my good friend Bart Chilton, who passed not that long ago and introduced me to this brilliant hedge fund manager who's come on today, James Koutoulas. James, thank you so much for coming on. James has a multi-strat hedge fund, an award-winning crypto fund, 80% plus returns a year, and we met a decade ago through Bart, who's the former chairman of the Commodities Future and Trading Commission. Bart was one of the great individuals of all time, kind, honest, caring. The investor was his foremost point of view. He in no way was someone who greased palms. He would only grease palms with friends over fun topics. And Bart, I miss you very much, and I really enjoyed your time. And a decade ago, you introduced me to James. I'm very thankful for that. And I've been very impressed to watch James's career blossom. And James, I want to hear all about this crypto fund.
Yeah, I just want to echo what you said about Bart. He's a good friend to me as well, and just truly cared. A lot of people in government, like they have, a service title, right? But they really set out to like serve themselves. And Bart truly cared about, the people he was in charge of protecting, and he was really instrumental to helping customers be made whole in the MFGlobal bankruptcy, and just a great guy. So.
Well, it's funny you bring up MFGlobal because I'd like to talk about that after cryptocurrency or right now if you want, because MFGlobal is a subject I'm very curious about, one that had a lot of ramifications throughout Wall Street.
Yeah, well, why don't we start on crypto, because the MFGlobal thing tends to be a rabbit hole, and often when people ask me about it, we never get back to the topics.
So let's hear about your crypto fund first. 80% returns, 88% returns.
Yeah, we've annualized about 80% over 4 years. We were one of, if not the first CFTC regulated crypto fund, but it's called the Leonidas Cryptocurrency Fund, and it's run under my multi-strat firm called Typhon Capital Management. But Leonidas is run by George Michalopoulos. He used to be the senior most energy derivatives trader at Citadel. So basically, he's been trading crypto since 2011, and came to me. Funny, his dad and my dad are both friends in Miami, and then he was actually in my brother-in-law's training class at Citadel. So we had two really strong touch points. But George came to me in like 2016, and it's basically like he wanted to run his own fund, but didn't want to do any of the hassle, right? So, we brought him under Typhon. We set him up in a couple different vehicles. So he actually runs a macro fund for us. He did, I think, 43% in macro last year. Crypto fund did like 66 last year.
Can you short Bitcoin or Ethereum? Do you have the ability to do that?
So we set up the fund in a manner where we only trade on U.S. exchanges. We're very cognizant of counterparty risk. We'll get into that a little later with MFGlobal, right? But we stay away from the Asian exchanges that tend to have, we think more prone to hacking and more prone to some technological problems. So we only use Gemini, Bittrex, and the CME futures. So we do short Bitcoin. So if in early 2018 we were short Bitcoin, unfortunately we were getting charged 500% margins because the brokers were so risk averse about anybody shorting Bitcoin, given to how volatile it is. So we did, that was our one kind of losing period. So even though we were short, we weren't short enough to be market neutral because of the margin cost of it. But we short Bitcoin through futures when necessary. And then the Ethereum futures are coming soon on CME. So we'll be using those as well. And that also opens up some more relative value trading. But the fund, it is long bias, but George's and in my thesis in the design of it is that Bitcoin is very volatile. It is not as competitive as a market like energy, which is what he's used to trading, right? So there is a huge amount of edge taking strategies that work for harnessing the volatility of the energy markets, which are probably the most competitive commodity market. I mean, energy and gold, right? But if strategies work in energy, they're really going to work well in crypto, which are far less competitive markets, right? So we are long bias, we tend to be long coins, but we do it tactically. We scale in and out, we do momentum based strategies, we do a little bit of mean reversion, some kind of like trend following, some relative value, but typical tactical commodity strategies. So for us, we basically net of all fees and expenses over 4 years, we've done about half the returns of Bitcoin, but at 1/3 of the risk. So during that time, Bitcoin had a 75% drawdown. Our max drawdown was 25%, right? So our view is, you don't need a fund to go get levered long or just 100% long Bitcoin or Ether or the crypto space. Like you do that on your phone at Coinbase or something, right?
Yeah.
So we think that rather, while we are generally long-term bullish on crypto, we believe in the technology. We believe in the thesis of it being a hedge against super easy fiscal and monetary policy. We're not married to it, and we know it is volatile, and there are going to be periods where you take big losses, right? So, there's funds out there that's charging very high fees that will take a 90% drawdown in the fund, which means if you're buying that top as an investor, you need to make 1,000% to get back to even, right?
Yes, I saw one of Pantera Capital's funds was down 82 or 85% 1 year.
Yeah, and investors take this mindset where it's like, okay, I'm just going to take 1% of my assets, I'll throw it in a fund like that's just levered beta, and if Bitcoin is super successful long term, then I'm going to win. And they treat it like a binary bet, right? It's either I'm going to make a lot or it's going to go to zero, right? And
does Typhon have a public view on Bitcoin over a 5 or 10 year period, or do you not publish that?
Yeah, I mean, I wouldn't say we publish a view, right? But I mean, we are Bitcoin maximalists, right? I mean, in the crypto space, I mean, we do think, Bitcoin for a lot of reasons we call it the Mac Daddy coin internally, right? We do think Bitcoin is the leading coin, right? But we think it's volatile, and for us, we would rather. I'm sorry.
The Winklevi, I see 400,000 as a price point, based on the gold market.
Yeah, I mean, we don't put it like a price target on it, right? I mean, Typhon as a whole, our philosophy is to trade tactically, right? So, we might have a long-term bullish view, but, we've been reducing risk over the last couple of days, right? Because, it looks like this rally might be petering out, right? So it's our job, where we really have alpha is getting out like ahead of the curve and like protecting the big gains, right? I mean, we're up like, I think 65% in the last 6 weeks, right? So like, why be a pig, right? Like that's a really good 6-week return. Let's lock in some of those gains. We think the momentum might be dying out here, and we could continue our long-term bullishness. But that's one of the reasons why we won HFM's award for best crypto fund last year. We've been nominated for the same award again, this year, because our view as a hedge fund is we need to provide uncorrelated, superior risk-adjusted returns.
Do you buy these new lycos?
We have not bought any in the fund. George has participated in some personally, like before the fund. And honestly, in a regulated structure, it's tricky, right? Because a lot of them are structured where they are securities, or maybe they're Reg D securities, and someone properly files an exemption with the SEC, and they hold them for 6 months, and they seize them. But there's a lot of regulatory issues in that space. So heretofore, we've really focused on trading the coins that are not securities, right? But just let me close the one loop there, though. Like philosophically, right? We only run a 0.1 or 10% correlation to Bitcoin over 4 years, right? So we've put up half the returns of Bitcoin net of all fees and expenses, but with only 0.1 correlation, right? And that's really the goal of Typhon, is to profit from volatility, to provide risk-adjusted returns. So even someone who owns a bunch of Bitcoin personally, will be diversifying their portfolio coming into our fund.
No, that was the
And
original.
we've run about a 25% higher Sortino ratio than just owning straight Bitcoin, because we've been so effective at containing the drawdowns versus Bitcoin's drawdowns.
Oh, wonderful. So I see that you're very passionate about MFGlobal. I would love to hear your views on it and how we can prevent another MFGlobal in the future.
Yeah. So, as you know, I spent about 2.5 years litigating MFGlobal completely pro bono, right? So, yeah, I mean, I'm passionate about it. It's probably, the most important thing I've done so far in my life, right? But, for those that don't know the story, again, Typhon trades a lot of commodities, trades a lot of futures, and MFGlobal was the largest non-bank commodity broker by a factor of 2 when it went bankrupt Halloween 2011. It was run at the time by a guy named John Corzine, who you may have met, but he was formerly the CEO of Goldman Sachs, governor and senator from New Jersey, one of Obama's biggest campaign donation bundlers, right? So very politically connected guy, right? But basically, he took all of the firm's capital, said, I am going to be the next Goldman Sachs, because he was fired from Goldman Sachs, right? Wanted to compete with them. And said, we are going to take principal risk, and we're going to trade this 200-year-old commodity brokerage into a global proprietary trading powerhouse, right? So he took all of the firm's capital, moved it over to London, entered into what are known as repo to maturity trades that would basically get him 30-to-1 leverage on one single trade, okay, betting that the so-called pigs, Portugal, Ireland, Iceland, Greece and Spain, at the time, the weaker European sovereign debts would not default, that the ECB, the European Central Bank, would have a put on them, basically, and bail them out before they would let them default, right? So he's right on the idea, but trading is, also your timing matters and your cash management matters, right? So Corzine took all the firm's capital, he levered up 30-to-1, okay, and made this bet, and then hit it from the credit
Now,
rating.
for our viewers, they should know that when Bear Stearns went bankrupt, they were something like 78-to-1. So his leverage was really approaching the heights of the financial crisis out of nowhere almost. I mean, there was no history of doing trading at MFGlobal.
And it was
just
all concentrated too, right? So it's one thing to be levered and be diversified, but to be that levered and have all of your capital in one trade, that means if you have a 3% or 3.3% mark-to-market adjustment against your position, like that position goes against you 3.3%, or you have a small change in your credit worthiness, you're on margin call, okay? Yep. Because you don't have an uncorrelated portfolio to diversify, right? You're just all in one trade, right? So they hit it from the credit rating agencies. MFGlobal's risk manager brought this to the attention of the board like 4 months before the bankruptcy, and said either this trade gets reduced or I'm out, and they fire the risk manager, okay? Because the entire firm was running on this one trade, right? Well, lo and behold, the credit agencies figured out what Corzine was doing, downgraded their credit. Their counterparty was JP Morgan Chase. JP Morgan downgraded their credit rating and increased their collateral. So Corzine was completely in love with this trade. He's like, this trade is good, this trade is good, it's gonna work. So rather than reduce his risk, he went into his customers' segregated trust accounts, right? That Mr. Chilton would say, by law, had to be segregated every second of every day. Okay, he rated those accounts under something that their CFO developed called the break the glass plan to use customer liquidity to fund MFGlobal's prop trading, took this money and used it to meet the margin calls. Well, this created a bankruptcy there, and basically 1.7 billion of customer funds went to MFGlobal's counterparties, and this was paid for by the customers who had no idea this was happening. The Corzine had no authority to do this for. The customers wouldn't benefit if this trade worked, right? They were just depositors, okay? And a commodity account under law is supposed to be infinitely safer than a bank account, right? Because if you look at a bank's allowed to engage in what's known as fractional reserve lending, right? So for reserve requirements, 5%. a bank can lend out $20 for every $1 it has, right? So by definition, every bank is insolvent, right? And that's why we have the Federal Reserve, so that banks can go and get an overnight loan, if there's, a run on the bank, right? But commodity brokers, the way they're designed legally, even if every customer came at the exact same second and demanded all their money in full that second, the commodity broker by law would still have to have an excess of its own capital in the customer omnibus account as a buffer. So if every customer took out all their money, MFGlobal was still supposed to have I think it was like $1 billion, something like that, some huge amount of money on its own reserves in that account in case you have a customer debit, whatever, right? Something happens where a customer has a big loss, the firm bears that risk beyond the customer, right? So that's why for 200 years before MFGlobal, no customer had ever lost a penny due to the failure of a commodity broker, because the customer segregation system was so strong. And Corzine, the first person to violate that. And oh, by the way, he didn't even have a commodities license, or he had a license, but he never took the exam, the basic exam that people don't even graduate high school take to learn about these protections and these rules. He was given a waiver by FINRA, the regulator.
Wow, that's very interesting. It was a phenomenal story and phenomenally told, James. Really.
Yeah.
No,
Well, that's just the background. So I'll get the cliff notes on the rest of it is, I'm an attorney. I've never practiced, law at a big law firm or anything like that. I started my hedge fund 1 year after I graduated law school, which was almost 13 years ago now. People started calling me, asking me what to do, because this had never happened before.
So what happened to the average account holder? Did they lose a certain percentage of their account?
So at the time of the bankruptcy, all assets were completely frozen. All 6.7 billion customer assets were frozen. Traders were carried off the trading floor by security. Electronic traders had their screens go black. They were completely locked out of the market. They had no access to anything, right? So what I did is I got a temporary law license in New York. I went to court. I filed an emergency motion asking just for my customers who had chosen to clear their managed accounts there to get 90% of their money back, right? And because this was a completely unprecedented situation, no one had bankruptcy lawyers if they're commodity traders, because it's never been an issue in 200 years, right?
No.
So the New York Times profiled what I was doing by 5-6 days after the bankruptcy. And they put me in a black trench coat looking scary outside of our New York office, actually in front of Trump Tower. But that picture and that article made it so we were getting 1,000 phone calls a day, literally, of people asking for help. And it was really the saddest thing I've ever dealt with. I mean, it was like grown men and women calling me, strangers, crying. I'm going to lose my house. I'm going to lose my farm. I can't buy seed for my farm. I remember this one single mother of twins. She was a former floor trader. She was about to buy a house, and she had kept the down payment in a commodity segregated account because by law, that was the safest place to put the money. So she was going to lose this house for her kids. And, I'm like, listen, you all got to stop calling me. I want to help, but I can't handle 1,000 phone calls a day. So back then, my firm, Typhon, it was just me, my 23-year-old little sister, and our head of ag trading, Jared Lehman, who's a farmer living on a farm in Indiana. Our office turned into it looked like a campaign headquarters. Okay, because victims came and they volunteered to answer phones. Like one of our clients who had several $100 million at MFGlobal sent their risk manager to our office to answer phones because he's like, your job now is to help James get his money back. Yeah. So thankfully, one of the people who called in these 1,000 phone calls is this guy named John Rowe, who was a commodity broker there. His dad is Phil Rowe, who just retired from several years or several terms in Congress, the only congressman who doesn't take PAC money. Okay, very honorable family from Tennessee. And John came to my office and he's like, James, we need to write a white paper and tell the American people why this bankruptcy is such a big deal, right? So on top of all these independent farmers, ranchers, retirees, traders, hedge funds, the money there, Coca-Cola, Southwest Airlines, Anheuser-Busch, Charles Schwab, all these major American businesses were victims here. right?
Yeah.
Because again, this was the biggest non-bank commodity broker, right? So, the entire industry was really dependent on MFGlobal. And if this money was going to be frozen in bankruptcy for years and people were going to get, maybe 70% was what the market thought would they get back, right? Then the whole industry, would be destroyed at least for 10, 20 years in America, right? So basically, the way things happen is John, my sister, and I formed a nonprofit called the Commodity Customer Coalition. I moved to New York in 6 hours' notice, never taking a class in bankruptcy. My litigation experience was an $8,000 collections case for my golf pro, my buddy Gil, right? And before I knew it, I'm representing 38,000 people completely pro bono against JP Morgan Chase, the trustee from the Lehman Brothers bankruptcy, and Clinton's FBI director. So the trustees in that case billed $2.4 billion in fees. We wound up raising about $200,000 in donations, right? But our organization came up with a plan that the judge took over the trustees, where the trustee was going to make everyone wait 9 months, fill out this, like 50-page claim form to get any money back, right? So their money would have been frozen for a minimum of 9 months, right? And basically, we came up with a plan that was a negative consent plan that used the brokerage statements as like an interim claim form. So we were able to get $4.2 billion back to customers 6 weeks after the bankruptcy.
Wow.
So 72, we got them 72% in 6 weeks. And we combined the litigation with the a very aggressive use of the media and social media. So like Rick Santelli at CNBC was incredibly helpful. He had me on once a week. Stephanie Rule at Bloomberg, Margaret Brennan.
Did the customers get to
then,
100% eventually? Were they made whole or no?
Yeah. So yeah. I mean, you're spoiling the end here, but
Sorry,
in the middle, right? Like, it's okay. But yeah, like, I mean, this was an intense case. Like JP Morgan had my personal bank accounts and credit cards and the CCC's bank accounts closed in retaliation for me going after them in the media.
Oh my God, did they really? Wow.
Yeah, Louis Free tried to file for sanctions against me to try to intimidate me, right? Me, the pro bono attorney, right?
I had no idea, James. You're a real patriot. Wow. I've been following you for a decade. I've known you to be an intelligent, successful fund manager. I had no idea you had performed such fantastic patriotic duties. I'm very impressed.
Thank you. But yeah, it was pretty insane. But long story short, we got 100 cents on the dollar. We recovered all 6.7 billion. John and I were required by our accountants to take $2,500 in salary to comply with the IRS nonprofit rules. But other than that, we did the whole thing completely pro bono. We don't want to make money off of the backs of fraud victims. But yeah, it was over 3,000 hours of legal work. Both John and I testified before Congress. Helped write a Commodity Customer Protection Act that has passed the House 3 times. Still hasn't gotten through the Senate. But, Eric Holder, who was the Attorney General, he retaliated against our biggest ally in Congress, Michael Grimm, who was an ex-Marine, ex-FBI agent who went deep undercover to bust a mob-owned hedge fund before he was in jail. Grimm helped us demand an independent counsel be appointed to investigate Corzine due to him being Obama's one of his biggest bundlers, right? Instead, Holder tried to basically get Grimm on a completely fake fundraising scandal, claiming he illegally took Israeli money. Couldn't get him on that. Kept investigating Grimm to keep him from going after Corzine, and eventually wound up indicting Grimm and convicting him on 1 count of tax evasion. I believe it was tax evasion, something related to taxes. Where 10 years before he was in Congress, he ran a health food restaurant called Healthalicious. And apparently, or allegedly, he did not pay the payroll taxes to his delivery drivers at this health food restaurant. So Grimm has to spend 9 months in jail, I think, over payroll taxes, I think a couple $1,000s to delivery drivers, 10 years before he was in Congress. But Corzine wasn't questioned by the FBI for over a year after using $1.7 billion in customer funds to make a margin call in his own trade and made the orders to do so on tape lines.
Wow.
Okay, so if that doesn't tell you anything about the the Obama administration and Eric Holder, like, you know.
Well, we don't touch politics or rebellion research, but
Sorry about that. You can
no,
edit that out if you need to.
it's okay. No, it's fine. Politics is a part of life. My father was a speechwriter for Walter Mondale, and my poppy was like the campaign chair for Hillary one year. So we've got liberals in the family, and my wife is a liberal. It just is what it is. But
Yeah.
no.
Well, I try to be as apolitical as possible. Like, if Corzine was a Republican, I would have done the exact same thing. Like, to me, parties don't matter. The law is what matters. And he unequivocally broke the law. And he should be in jail right now, if you ask me. And I've actually written indictments to multiple state AGs who have not done anything about it after Obama failed to charge him before the statute of limitations ran out and gave him a de facto pardon.
No. Yeah, no, in 100 plus episodes, I managed to avoid admitting my political persuasion is quite different. I'm actually a conservative liberal, which would be most closely aligned with John F. Kennedy, whose politics I mostly admire. And let's not talk about today.
Cheers to that.
Yeah, that's history. Since JFK 60 years ago, I feel like it's instead of politics, it's history. But yes, I'd say I most align myself with but also, I think the Roman Empire is a great way to manage a nation state, learning it from their mistakes. I mean, learning from mistakes is the best way to move forward as a human being also. And James, this has been fantastic. Really appreciate it. One last question before you go. Is there, I hate to jump all the way back to crypto, but is there one coin you would stay away from? Is there any specific coin that you have a negative association with? And then I will let you go.
Yeah, well, so, for me as a fund manager, right, I really take it very seriously to do whatever I can to protect investors. I did the MFGlobal bankruptcy pro bono. I did the PFG bankruptcy, pro bono. And I think it's really important that markets remain fair and honest. And, crypto is something I fully believe in the technology, but there's a lot of bad people in the crypto industry. There's a lot of frauds. There's a lot of people who willfully violate the securities laws. So on top of running Typhon and our Leonidas crypto fund, I am lead counsel or part of the lead counsel group in the EOS securities fraud, class action. And, to me, that was the most flagrant violation of the law I've ever seen.
Quick synopsis?
Yeah, I mean, quick synopsis is basically they raised $4 billion, promising people this revolutionary decentralized coin that would basically be the new latest and greatest platform for smart contracts. And instead, they concentrated it with Chinese oligarchs, and they wrote offering documents that say, instead of you getting an investment that we told you about this revolutionary investment that you're going to make 1,000x return on your investment. They were literally promising people insane returns like that. They wrote in the documents that actually you're not making an investment at all. Your ICO purchase is actually, you're just giving us revenue. And this is our revenue, and we could do with it whatever we want. So they actually own, I think, like 6,600 Bitcoins for their own benefit from proceeds of things that they told people all over the world, like Chinese retail investors, US funds, yada, 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 that this was a great investment. They just kept the money. Okay. And, there was an SEC cease and desist order filed against them. I think it was October 2019, I want to say. I'm losing track of the years here. It's January, but, where the SEC got them to settle for, admitting that they were offering unregistered securities, right? And there were a lot of major people in the financial industry who benefited from this. And, it's something in Typhon where, we're actually working on launching an activist litigation fund. So I could go after more bad people like, the MFGlobals and the PFGs and the EOSs of the world. But, I believe that really for Bitcoin, for Ethereum, for the legitimate crypto coins out there to really realize their whole potential, the crypto space needs to be cleaned up. And people who commit fraud, need to be held really accountable, not like slap on the wrist fines that are like less than tax rates, right, that aren't a deterrent. But, they really need to be held to task. A lot of them, I think, need to go to jail. And, one thing I would call on is, we're the only, well, actually us and our lead plaintiff are the only fund managers who have publicly associated ourselves with the EOS fraud. privately, many of the biggest crypto fund managers told me these guys are absolutely a fraud, but we don't want to offend them. They throw billions of dollars around of ill-gotten money in this crypto space. And these fund managers say, we would rather have the deal flow that comes from illegally raised money, okay, than to get back money we lost investing in a fraud on behalf of our investors, right? So, you know, with Leonidas, our numbers speak for themselves. I think we've done an amazing job, you know, having an uncorrelated, high risk adjusted return stream, for our crypto investors. But unlike the other crypto funds out there, we hold the bad guys accountable and we put our clients first. We never traded a contract of EOS because, my spidey sense told me it was a fraud from day one. But a lot of those crypto funds did, and they lost a lot of money, and they haven't done anything to get that money back. So, if people out there listening are invested in a crypto fund, ask them, did you ever invest in EOS? And, what are you doing? Like, are you part of this EOS class action? Like, what are you doing to help get those losses back? And, I really urge people, who are in that crypto space to value integrity along with greed, right? It's okay to be greedy, right? It's okay to be bullish on the potential of crypto. But integrity really matters when you're talking about decentralized, coins that are controlled algorithmically, where, sometimes there's computer glitches or sometimes there's security breaches. This is still, early stages of the technology. Having someone that's going to watch your back and like put you first rather than their deal flow or like their social life with fraudsters, like, really check the priorities of the people you're trusting your capital to in the space.
Well, this has been a phenomenal experience, James. I couldn't be more thankful that you donated your time to our viewers, and it's just been a really fantastic learning experience. So I wish you very well in 2021 and continued success. And I look forward to the book eventually that you will write on MFGlobal, and I'm excited to buy extra copies for my students.
We'll see about that, but yeah, thanks for having me. It's been too long. It's great to see you again, and just cheers to Bart one more time, man. He was really a great guy.
Bart Shelton was an amazing individual. I very definitely loved the guy. So here's to you, Bart Shelton.